What we're seeing right now play out is a better vaccination rollout in the United States versus Europe, a bigger fiscal impulse in the United States versus Europe, and the potential for growth differentials to really lean in the United States' favour. At the same time, you've got this big short position on the US dollar, a crowded trade reflected in the Bank of America Fund Manager survey that came out this morning. Which way are you leaning in foreign exchange right now, Erin?
I do think that the pace of the decline of the dollar will slow from here. And importantly, I think it's going to diversify from here. So in the beginning, really starting in the third quarter of last year, we saw the dollar start to depreciate mostly against its larger trade-weighted currencies like the euro and to some extent like Aussie dollar. So mostly developed market currencies. I think from here, we're going to see a shift where you're going to start to see the dollar continue to weaken a little bit against developed market currencies, ex-US, but it's going to shift to also being a trade more diversified across emerging markets as well. So while we're short the dollar and remain, underweight the dollar across portfolios, we have shifted that from predominantly a trade against developed market currencies and widening that out to now include some emerging market currencies as well.
Has your call on the bond market shifted as well, on the Treasury market, on duration, at the long end?
I think from here, again, the pace is going to slow as well. We're not going to see the same sell-off in rates that we saw really accelerate in the fourth quarter of last year and into early 2021. I think the dollar, I think that the rates from here against a 60-40 portfolio or an asset allocation multi-asset portfolio is actually attractive on a relative yield differential basis. And I do think that the rates are going to be fairly range bound for the duration of this year. So while we may, see some further weakening later in the year, for now, I think that the rates actually looked relatively attractive to buy in terms of duration.